Hello traders, welcome back. In the previous lecture, I have discussed about the 8 major currencies and the 28 mostly traded currency pairs in Forex. Now in this lecture today, I will be talking to you about the correlation of currencies and the currency pairs. So let's begin to know what currency correlation is and how does it affect when trading the currency market. At first, we will start from the basic understanding of the correlation of currencies, and then we will discuss the correlation of currency pairs, so that you will never confuse the topic whenever you hear the term of correlation, whether it's correlation of currencies or currency pairs. So what is the meaning of correlation and why this is so important? In simple term, correlation means the relationship between two things. So currency correlation means relationship between two currencies. For an example, we know that in EURUSD, the euro is paired up with the US dollar. So they both has a relationship together. Anything happens to an individual currency on this pair, like the fundamental or economical change of the related country, it will affect the other currency as well, as they both are tied up with the pairing. So let's say if the euro gets stronger than the US dollar because of its economic or other fundamental changes, then the overall EURUSD pair will have the bullish momentum and hence the price will rise, since here the euro is the base currency and we know that if the base currency becomes stronger over the counter currency, then the price rises on that pair. On the same way, if the US dollar gets stronger over the euro, then we will come to see occurrence of bearish momentum on the EURUSD currency pair. Since USD is the counter currency here, and we know that if the counter currency becomes stronger over the base currency, then the overall price falls on that pair. The same thing happens when euro pair up with the other currencies like Japan yen, British pound, Canadian dollar, etc. So this is what currency correlation is. Each of the currency's strength or weakness has an effect on the other currency and overall on the whole currency pair. Now that you know what currency correlation is, let's talk about the correlation of currency pairs. So what is the correlation of currency pairs? In simple term, currency pair correlation means relationship between two currency pairs. This is exactly the same like the currency correlation, but this time the relationship happens between the currency pairs. To learn more about the correlation of currency pairs, you need to understand the different types of correlation first. So based on the behavior of the currency or currency pairs, the currency or currency pair correlation is of 3 types. The first type, we can call this as the positive correlation. The second type is called as the negative correlation. And the third one, we can call this as the neutral or no correlation. I will explain each of these topics in the upcoming lectures with graphical and as well as real chart examples. So this is the end for today. We'll see you in the next class. Till then, have a nice day and goodbye.